Wednesday is turning out to be a good day for the Indian currency. Fitch's decision to revise India's outlook gave a further boost to the Indian rupee, which was trading at historic lows in the markets yesterday. Remember, this is the first time that the rupee has shown signs of a recovery after free falling for over 5 weeks. It has closed the day today at 57.79 on your screens. Tushar Pradhan says that the volatility in the rupee is no reason for investors to change their portfolio positions, and Indian markets continue to offer opportunities. While Chandresh Nigam at Axis AMC says a depreciating currency may prompt FIIs to sell other asset classes.
The fluctuation in the rupee is a given. It is not something that can be wished away. While we would like to have a very stable currency environment, it is not always going to be possible. But does that mean that a volatile rupee really underscores the fact that India is not an attractive destination? That is where I disagree.
If the currency stays weak, you will find more and more people ready to sell whatever assets they have in that currency, whether it's bonds or equities. The currency seems to be holding, obviously, with the intervention of the RBI.
All right, let's also get in then. Vijay Bhamwani, who's author and CEO, BSPL India. Also joining us is NS Venkatesh, who's Treasury Head, IDBI Bank. Mr. Venkatesh, hi, let's start with you first. And what's the sense that you make of the IIP data first, which was slightly disappointing, and then, of course, the Fitch's revision, which is really timely?
Today was a day where lots of action happened on the data front as well as on the rating front and all those things. The IIP data, like what you said, was a little bit disappointing, I would say, in the sense that it really is worrisome, in the sense that the manufacturing is showing signs of slowdown. If you see month on month, the negative percentage is somewhere around 14% readings which are coming in. So around 2% total in the IIP. I believe that definitely there is a slowdown in the economy which is happening. But the positive factor that we received during the day is essentially the Fitch revision of rating, or rather the outlook in the rating, which they changed from negative to stable. I think that is a positive sign, and the wordings that they have used in their report essentially saying that they have taken note of the steps taken by the government to manage the fiscal deficit and better fiscal management, which has prompted them to actually revise the outlook to stable. That is a very, very welcome sign. Having said that, the markets have been very, very choppy, in the sense that the equity also was not performing well that way. It was more or less flattish. The rupee had really strengthened. The rupee had opened out at around 58.20 and then moved down to around 57.86, then went back around to 58, and finally it closed at around 57.80 based on all these news fronts and also flows coming in. Sure. We actually saw flows coming in the sense that we actually saw a little bit of flows coming in from the exporters selling their receivables. We also saw some flows come from the foreign bank who are selling dollars.
Sure. Mr. Venkatesh, while there have been lots of positives in the market today, are you really surprised by the Fitch's timing? Because it has come at a time when there have been lots of CAD concerns or weak IIP data, and the rupee trading at around record lows, and an RBI intervention also happening. How are you looking at the timing of the Fitch coming in, really?
I would say it's a welcome sort of report which has come. But timing-wise, if you see, last June they had done a review and kept it at around negative. Okay. So to that much extent, they have looked at it for one year. So it was an annual sort of exercise which they have done, and the annual exercise necessarily happened to be in June. So it is only a mere coincidence that it has come at this particular point of time, and the market was a little bit choppy. But I would say they have done that annual sort of due diligence and then looked at the way the government has really tightened the controls and kept on reducing the fiscal deficit and even brought it down to around 4.9. I think that is what has turned the tide as far as the way the Fitch has put out this report. But I think it's a little bit of I would say it's only a coincidence. Otherwise, it is an annual diligence which they generally do in June. Last June, they put it at negative. Now they have put it as stable.
Fair point, Mr. Venkatesh. Just coming back to the data that's expected this week again, you have the inflation and the trade data numbers expected ahead of the RBI policy. How are you reading into all of these events now?
I personally believe that the inflation numbers will also be below 5 only. It will be at around 4.7, with the core also being less than 3. So to that much extent, it clearly indicates that the inflation will be in the comfort zone. Though today you saw the CPI number being at around 9.2, but still I think it is okay given the way in which monsoons are coming. I think the CPI inflation will also start showing signs of coming down. The trade data is also expected to be better than the last time, for the simple reason of the gold imports falling off dramatically. So to that much extent, I personally believe that it gives a little bit of room, I would say, for the Reserve Bank of India to actually look at maybe cutting the rates to spur the growth. So that is, I think, a limited space is now showing in front of the central banker, though there is the concern of the rupee being a little bit volatile and had shown a little bit of a weakening bias in the last couple of days. But I think growth, for supporting growth, I think Reserve Bank has some limited space now.
So, Mr. Venkatesh, where does that leave the rupee now? Because we were almost talking about 56, now we're 60, now we're talking about 56 and 55 yet again. What range would you look at the rupee for the very near term?
To the extent of up to June, if you are talking June 30th, I would always put it at somewhere around 56.5 sort of level. That is essentially because we are seeing remittances picking up from the Middle East. Then we are seeing the export receivables happening. Then the actions, the regulatory actions of yesterday, RBI circular of telling the SEZs to bring any export receivables which is beyond 12 months into the country with immediate effect. Then multinational companies stake buyback is happening. So to that much extent, there are a lot of flows which are expected to come. And today, SEBI's announcement relating to making the smoother way for maybe the FIIs to enter India for investments. So I think you will see a lot of interest happening. And if there is a supportive monetary policy of maybe cutting the rates to prompt the growth, as part of the growth, then the growth story is also back on the table, which will bring more equity flows into the country.
Fair point, Mr. Venkatesh. Let's get Vijay into the conversation as well. And Vijay, it has been a very, very volatile rupee for most of this week till time. 1% off again coming into the markets today. How is that looking on charts, and how would you want to put your day tomorrow?
Manisha, day before yesterday and yesterday, I said I think a swing top is in place, and the rupee was looking oversold, which means the USD INR was looking stretched, and I did mention that I would feel very uncomfortable buying the USD INR at this point in time. One has to wait for a meaningful decline before one goes in and buys. Of course, the long USD and short INR trade is still open, but there will be a meaningful correction, just as there was a stupendous rise in the USD over the last 8 to 10 trading sessions. So there has to be a cool off. Now, whether that happens at 56.5 on the currency derivative segment in the prompt month future series, or it happens at sub 56, one has to wait and cross the bridge when we come to it. But at this point in time, it does not make sense to buy the USD at this current juncture, at current prices, because the swing high of 59.13, which was made day before yesterday, I think that is likely to act as a very stiff glass ceiling in the absolute near term. Unless you see a breakout above this on higher volumes, open interest expansion, momentum players should keep away. Bottom fishing, consider when the price and volume and open interest do indicate that close to 56.5.